Understanding the funding landscape is crucial to making informed and strategic decisions about securing the resources needed to propel a business forward. The funding landscape refers to the various options available for financing a business, ranging from traditional bank loans and venture capital to crowdfunding and government grants. By navigating this landscape effectively, entrepreneurs can identify the most suitable funding sources tailored to their unique needs and growth stages. This point is vital in the context of stop hustling for pennies, let's get you real funding fast, because it encourages a shift from piecemeal financial strategies to pursuing more substantial and impactful funding solutions. The significance of understanding the funding landscape cannot be overstated. Traditional funding avenues like bank loans offer stability, but often come with stringent approval processes and requirements that can be barriers for budding entrepreneurs. Alternatively, venture capital provides not only money but potentially valuable mentorship and networking opportunities, which can be crucial for scaling operations quickly. Crowdfunding platforms like Kickstarter and GoFundMe, on the other hand, democratize funding by allowing broad public access to support innovative ideas. Understanding these diverse options enables businesses to strategically position themselves, ensuring a better alignment with their financial goals and operational needs. For instance, consider a tech startup seeking to launch a groundbreaking app. Opting for venture capital might provide the necessary financial boost and domain expertise essential for navigating the competitive tech industry. In contrast, a small local business wanting to maintain complete control might find a local bank loan more suitable. These examples illustrate how different funding choices can significantly influence a company's trajectory and operational decisions. Several entrepreneurs and financial experts advocate for a deeper understanding of the funding landscape as a crucial step towards sustainable business growth. Gary Vaynerchuk, a prominent entrepreneur and investor, often highlights the importance of choosing the right type of funding to match one's business model and long-term vision. However, challenges exist, including the complexity of each funding option and the inherent risks, such as potential loss of control in exchange for capital. Critics might argue that some funding avenues, like venture capital, can prioritize rapid growth over sustainable practices, leading to long-term instability. In the broader context of the main topic, understanding the funding landscape empowers entrepreneurs to stop focusing on short-term, insufficient financial solutions and instead aim for substantial, strategic funding. This knowledge forms the bedrock for more effective planning, allowing entrepreneurs to channel their energy and resources toward opportunities that offer greater returns and foster long-term growth and innovation. The concept introduced by the heading, Stop Hustling for Pennies, Let's Get You Real Funding Fast, focuses on shifting entrepreneurs' mindset from scrapping by with minimal short-term funding sources to obtaining substantial financial backing that can foster significant growth and innovation. This perspective emphasizes the importance of securing adequate capital to transform entrepreneurial dreams into reality without being ensnared in constant low-value funding pursuits. In the realm of entrepreneurship, the significance of securing real funding cannot be overstated. Small businesses and startups often struggle with limited resources, which confines their potential and growth trajectory. Real funding provides a larger playing field, a catalyst that facilitates scaling operations, entering new markets, investing in crucial technologies, and hiring essential talent. Essentially, it lays the groundwork for sustainable success rather than survival. To illustrate, consider a tech startup that's developed a promising app. Instead of relying on personal savings or minor loans that might barely cover basic expenses, acquiring substantial venture capital can fund the app's development, robust marketing campaigns, and a skilled team to ensure its competitive edge. Similarly, a small restaurant looking to establish a franchise could secure a large-scale investment or a business grant to fund new locations, refined branding, and improved logistics. This notion is supported by industry experts who argue that strategic, well-timed investments can accelerate growth significantly more than piecemeal efforts. Investors often emphasize the importance of seeing the bigger picture, preparing for substantial investments that align with growth milestones rather than chasing after pocket change strategies that tend to stall progress. However, there are challenges and controversies associated with focusing on large-scale funding. One potential pitfall is the pressure and expectations from investors, which might lead to compromising the original vision of the business. Additionally, not every business model requires or can sustain large-scale funding, as some niche markets or industries might thrive with incremental and organic growth. The connection of this concept to the broader topic is pivotal. Real funding acts as a linchpin in the entrepreneurial ecosystem, influencing innovation, competitive positioning, and long-term viability. Encouraging businesses to seek these resources not only primes them for greater success, but also reinforces an ecosystem that values sustainable development over mere survival. In this way, obtaining real funding represents a transformative step in navigating the challenging yet rewarding landscape of entrepreneurship. The concept of moving beyond the hustle, why pennies aren't enough, challenges the traditional mindset of continually working small, low-value tasks, or hustling, for minimal financial reward. At its core, it's about recognizing the limitations of expending maximum effort for incremental gains, and instead shifting focus towards securing substantial funding or revenue streams that can offer significant financial backing and long-term success. This point is crucial because it urges entrepreneurs and business professionals to reconsider their approach to generating income. Rather than spreading themselves thin over numerous small tasks or gigs, the emphasis is on seeking funding opportunities that can provide a more stable and lucrative foundation for development and growth. Consider the gig economy, where many individuals hustle for pennies, taking on countless small jobs for minor pay. Contrast this with startups that secure venture capital. While the former may provide immediate, albeit small, income, the latter can offer strategic investment that empowers a business to scale exponentially. Another example is a small retail business constantly running local promotions to drive sales, versus securing a substantial loan or grant that enables a market expansion or the launch of an e-commerce platform, thus accessing a larger customer base and significantly increasing revenue potential. This idea finds strong support among thought leaders who advocate for smart work over hard work. For instance, successful entrepreneurs like Tim Ferriss often promote strategies that maximize efficiency and outcomes, reducing time spent on less impactful tasks. However, potential challenges to this concept include the risk associated with pursuing larger funding, such as the possibility of failing to secure it or becoming overly reliant on external capital. Critics may argue that the hustle culture builds resilience and character, providing valuable experience that can be beneficial in the long run. Despite these differing viewpoints, the core idea of moving beyond the hustle ties into broader themes of strategic financial planning and sustainable business growth. It influences other aspects of the main topic by highlighting the importance of resource allocation. Time, energy, and effort should align with opportunities that offer the highest returns. Ultimately, this viewpoint encourages audiences to evaluate their financial strategies critically, aiming for significant achievements rather than settling for immediate minor gains. It's a call to action to redefine success beyond the hustle, emphasizing the pursuit of real, impactful funding that supports lasting ventures. The concept introduced in the heading, "Stop Hustling for Pennies. Let's Get You Real Funding Fast," underscores the idea of moving away from making small, incremental gains and instead focusing on securing substantial financial backing quickly to support business growth. This approach highlights the importance of obtaining adequate funding, such as venture capital, angel investments, or business loans, rather than relying on personal savings, small loans, or piecemeal income. The significance of this point ties directly into the broader theme of entrepreneurship and business development. In any business, time is of the essence. Companies that secure sufficient funding can more efficiently implement strategies, scale operations, and access resources that would otherwise be unattainable when relying solely on meager, incremental income. By acquiring real funding, entrepreneurs can focus on optimal growth trajectories without being mired down by financial constraints that stymie innovation. Two examples serve to illustrate this concept. The first is the rise of tech startups like Airbnb and Uber, both of which secured massive funding rounds that enabled them to expand rapidly and dominate their respective markets. Without substantial financial backing, scaling to such a level in such a short time frame would have been nearly impossible. Secondly, consider small businesses that have traditionally relied on bank loans but can now turn to crowdfunding platforms such as Kickstarter or GoFundMe. These platforms allow them to raise significant amounts in a short period, offering a modern alternative to traditional financing that aligns with the desire for speedy, substantial support. The validity of this idea is often supported by venture capitalists and business growth strategists who emphasize the importance of rapid scaling over slow, organic growth in fast-moving markets. The argument is that in today's digital age, speed is crucial, and businesses that lag in funding risk falling behind more agile competitors. However, this approach is not without its challenges. Critics argue that securing large funding often comes with strings attached, including equity dilution and loss of control. The pressure to generate returns for investors can also lead to unsustainable growth practices. Furthermore, not all businesses require or are suited for rapid scaling. Some benefit from slower, more controlled growth patterns. Ultimately, this concept influences the broader topic by prompting entrepreneurs to reassess their financial strategies critically. By understanding that pursuing substantial funding can significantly alter their growth potential, business owners can better navigate the myriad of options available for expansion and sustainability.